Right. Let's see. All right, everybody. Good evening. This is Seth Shamin. I am the founder and CEO of Headway Investments, Headway Capital, and Headway Properties. Um, Today's webinar, I'm just going to give a few more minutes to some more participants to show up. Let's see. Yep, there are people coming in. Give me a few more minutes. We'll try to start as soon as possible. All right, so for two attendees, I think there's five more on the waiting list. Give me a few minutes. All right, let's start. Thank you, everybody, for joining. If you don't know me, my name is Seth Shami. I am founder and CEO of Headway Capital, Headway Investments. Today it's April 4th, and today's topic is one of my favorite topics. It's talk about how do we really create value and increase value in real estate, and why should investors care about it. So again, the topic is kind of very simplified, but there are too many layers to it. And we'll try to go as deep as possible today, trying to keep it as simple as possible for general audience to be interested in. So again, without any delay, let's start. This is our phone number. If you want these slides, please text in this number, and one of our team members will definitely going to can send you the copy of the slide. Just a disclaimer: we are not the CPAs, not we are the financial attorneys. Everything in this education webinar is purely for education purposes. Any advice, any consultation, we recommend you to contact your own CPA, your legal or financial advisor. So like I said, I'm the founder for Headway Capital, Headway Investments. We are a company of 200 employees between Texas and Arizona. In our core team, we are about 7 people, 4 of them right in front of your screen. Headway is designed to build and protect the wealth. The way we started help our company, I want to say about 8 years ago, where me and my wife, Dr. Murr, she's also engaged in the property in this company. We wanted to invest our own capital for preservation, and that's how we started. Like even as of today, any project we do, we invest our own capital first before we take any investor capital. On our screen, you'll see me, my wife, Dr. Moore, she's a gastroenterologist. Brian Farrell, he's our investor relations director. Umar Nakwi, he's our chief financial officer, who handles all of our investment decisions, most of the financials. Him and I are very much engaged in creating NOI, creating value for properties, which is purely execution of business plan for asset management. That's precisely the topic today. A little bit about our track record. At Headway, we own close to about just under 3,300 apartment units, and the value as of this year or last year is about 539 million. Our thesis or our historical track record is to produce 25 to 30% annual average annual return. Currently, we have about 430 active investors, and we host an audience of more than 7,000 people that I want to say 8,000 now that look at our webinar and our content month over month. At Headway, this is our flywheel, right? This is how we produce value. I can pretty much spend all day on the slide alone, but overall in our company, each and every employee of ours understand the meaning of these four key principles that we apply at Headway. We stay focused, we stay purposeful, we stay disciplined, and we stay consistent. These are the four core values that we built anytime when we hire somebody or we promote somebody within our company, or even when we pick a project for investment. Those four core values is a central point for our business. Today's topic is creating millions in values through multifamily investing. It's easiest sound that it can be done. Like I said initially, it's one of my favorite topics. In multifamily, the dynamics of investment is very different. If you have owned or own any real estate, you may have different kinds of asset classes in there. You could have, I've had people who have investing in single family, or investing into land or in raw land or development. But throughout our research and throughout the years, we have identified that multifamily apartment complexes has the most powerful way of increasing in value, right? So in today's presentation, we'll find out, we'll try to explain in a simplest way possible that how a small change or a small improvement in operations can increase the value of the company. So let's talk about cap rate. It's a very common term in commercial real estate, and it's been used very rigorously between buyers and sellers and investors and operators. Cap rate is one thing that identifies the valuation of an asset in a commercial market. Cap rates are not applicable in most cases for single family rental houses or one or two rental houses. They're mostly based on your net operating income, right? So you can see the formula on the screen. It's the cap rate is the ratio between the NOI by the current value, property value. In other words, you can also think of it this way. Let's say you have an asset for $10 million. If you go and buy that asset for all cash, which basically means it's an unlevered return, which is actually a cap rate. The real formula or the real way to think about cap rate is cap rate tells you what is the overall value of a certain segment that's going for, right? This is one key item that everybody understands. So in other words, I'll give you one other example why this is so important. Let's say you are running a commercial property, you're collecting rents, you're collecting the income, and your income is 100,000 income, right? For a year. Your cap rate in that area will dictate what is that 100,000 means in the valuation. Right? So simply put, it's a way to evaluate or do analysis for your property of what value comes out for the given market. Now that considers your geographical location, your age of the asset, your class of the asset, your competition, not so much on the comps, right? So the big difference, the way commercial properties are evaluated are based on the cap rate, on single family or individual houses, if somebody is buying houses and renting them, their value are based on the comps, on the area comps, right? That's not how in commercial real estate. Commercial real estate is all about income, how much NOI, net operating income, that you can produce from commercial property. A lot of times this cap rate is also used to really tell you whether it's a good deal or a bad deal. For example, a brand new A plus high-rise apartment complex in Midtown or downtown will probably have a very low value, very low cap rate, which means a lower cap rate, higher the value. Why? Because clearly that property is um, um, rightly located. It's brand new. It has all the bells and whistles. 9 out of 10 times, it's catering to high rent payers, white collar demographic. That means your property is more secure and stable, which means your cap rate is going to be lower, which means your transaction will be a higher value transaction, so your asset is more valuable. If you're looking for a property or an apartment complex or a commercial real estate property in um, in a smaller area or a bad area, where your clientele or your rents are not as much, clearly your cap rate will be higher, right? So the higher the cap rate, uh, the lower the value and vice versa. Let's take one example. I want to get to a point where once you guys understand what the value of the cap rate, then as an investor or as a passive investor, then why should you care, right? In our portfolio, we own 43 apartment projects between Texas and Arizona, and we very proudly boast about um, our operations in a way that not only our income, our rental income is maximized with occupancy and collections and delinquency, which means if we are trying to collect from 100 people, we will make sure that we are collecting from 100 people. And if somebody is not paying, we try to evict them as fast as possible. This is a normal standard for the industry. The other thing that we do is we pay a very high attention to other income. In other words, our other income or our miscellaneous income is mostly the case for anything other than your rental income. So it could be your parking income, it could be your trash income, your utilities, your move-in, move-out fees, and things of that nature. Give us a. Sorry about that. Going back to discussing in the NY, the dollar value of an NOI. Let's take an example here, right? If you increase your NOI by $1, what does that mean? So based on your cap rate, let's say if your cap rate in ongoing area is 10%, it's a very high cap rate. By the way, I'm not seeing this kind of cap rate in apartment complexes for a very long time. Usually the apartment complexes cap rate is anywhere between 5 to 6.5%, depending on what kind of asset you're buying. But if you are, let's say, in an area where there's for simple math, your cap rate is let's say 10%, that $1 increase in NOI means $10 value in your property, right? In other words, if you have $100,000 in the increase in NOI, at the 10% cap, it's $1 million increase in value, right? So that's a pretty strong number to understand. The real question is that why an investor should worry about it, right? Why should they care? Well, that's the whole point of this conversation today. Is when I, as an investor, invest in a property, I want to see what price am I paying today, what kind of value I'm going to add, and how am I going to increase the value of the property? So in other words, in apartment complexes, we talk about value add and multifamily. In simple word, value add means that you have a property that is in some kind of distress, right? Either it's in a distress of physical condition, or maybe the units are not upgraded or not to the same level as the comps or the competition in the area, or it could be in distress of operations. Right? So in other words, let's say if you have a nice property, has no deferred maintenance, have no construction requirements, have no improvements to be done, then you pretty much stuck with um, going it. Then what if you have all of these issues that be resolved, but you still have a value add? What it basically means that your value add is nothing but an operation improvement. Which, in other words, maybe your team is not right on the property. Maybe your manager is not right on the property. Maybe your maintenance staff is not right on the property. Again, we're talking in terms of apartment complexes. The When we go and buy a property on apartment complexes, we look for those values. The first value we look for is that if there's a poor management, right? That's the easiest thing to save and improve. The other thing that we look for is how many units, or if the property is up to the standard of the competition. One of the good examples could be is that in this in this time of the um, in this time, pretty much every apartment complex that you live in needs a washer dryer, right? Or a kitchen is a selling point for an apartment to be leased. A lot of times, these kitchens come with the granite countertops. Or the other situation could be is that the flooring is pretty even. Nobody likes carpets anymore, where they cause allergens, they cause so many other things. When we do those things, we look for those things for operation challenges, for operational improvements, which means the team is not right, the leader is not right. I can tell you personally, I spend 85% of my time working in the town. As a CEO of the company, we have plus minus 200 employees at any given time from Texas and Arizona. Some of them are direct employees, and some of them are employees that we manage through a third party. But our job, or my job, and my core team job is to work on our leadership day in, day out. That leadership alone can improve a lot of things. That's our number one strategy. Number two strategy is to figure out what other improvements can we do. I can give you one of the examples. So far, we have done more than $10 million of renovation just in Houston area. I'm not even including the Arizona area. But if I overall include all of the renovation that we've done so far, it's over $50 million. Those are the improvements that we have done on the property. That includes fixing all the carpentry, doing the plumbing work, doing the deep plumbing work, underground plumbing work, painting, ACs, roof, you name it, right? We've done it all. Those are the fast things that we can do. Right? Some of it we do it in house, and some of it we do it through outside contractors. But that value add is a 90-day turnaround for us. When we show up and when we take over a property at Headway, our team is specialized in turning around all of that renovation within 90 days. Right? And in most cases, within 60 days. So we have a very streamlined, fast process to take over property, get done with all the renovations. And then the last part is operational improvement. Operational improvement takes time. It takes about 6 months, 8 months, sometimes a whole year to start improving the clientele, kicking out bad tenants, evicting people who are not paying on time, improving the overall community environment. Right? Our first approach is to bring those 4 Ps in a C, right? So the way we define it is that the 4 Ps in a C is the way of our operations. Once again, why investors should care? An investor should know, if I'm investing with an operator, are they going to increase value, right? Your value add doesn't have to be an old property. We have had a new property that we bought and we increased the other income by 85%. We increased the rental income by 27%. On average, what I've seen historically, I've never seen an increase in rental income but more than 7 or 8%. In that one particular property, we have done those kind of improvements by systematically passing through our property and our project with 37 checkpoints of operations improvement. So we have a pretty standard formulated 37 checkpoints operation guideline that we pass each property through, right? You just like think of it like a conveyor belt. One property comes in, and we have this proven process of 37 operational improvements that we apply to that property. Going back to why I was keep saying why investors should care, they need to know, they need to understand that when they're investing with a firm, are you investing with a firm who have no idea about operations? Are you investing with a firm who may or may not know the internal details of value add and how to increase occupancy? So remember when I was saying the 4 P's and a C, our team is trained to pay a very extreme detail and attention on our people, our product, our price, our promotion, and our customer service. That 4 P's and C defines the overall approach of our operation. So if we have an older property, or if we have a newer property, and we want you to add some value, that takes first time living. But those 4 P's and 1 C, so 4 P and a C, takes almost 12 months to start improving the community. And that's when you create the value, right? So going back, when we take over property, our goal is just one goal. Where is my NOI? Can I increase my NOI? How do I increase my NOI? Because when I increase my NOI, my valuation of the property goes up because of the capital. Again, your value of the property is your NOI divided by capital. Or vice versa, your cap rate is your NOI divided by the value. So let's say you bought a property for 10 million today. You increase the NOI by 100,000. In 1 year, your NOI increased by 100,000. That means your value of the property today that you bought it for 10 million is now after 1 year is 11 million, based on the small picture over here. This is why investors who do not deal with day-to-day should understand and learn who are they investing with? How are they paying? How are they going to get paid? How are they going to get the investment to the final projection value? There are a lot of good operators out there, and they're doing exactly the same thing what we're doing. And there are a lot of operators who are not doing the same thing what we're doing. So it's really our job today is to educate you guys where when you go and try to invest, you can ask the right questions. What are the challenges in the creating value? I think I've covered it quite a bit, right? That when we try to identify a project, there are a few things that are top 6, 7 items that we look for. That's the first step of finding a property, of finding a project that actually requires value to invest. Right? In simple words, when we say a value add project, you can think of this way that you're buying a problem, right? You're buying a project with a lot of problems. Do we know how to fix those problems, right? And that part is a very, very complex process in terms of experience. There's a lot of common pitfalls. I'll give you one example. I know a bunch of operators, especially in my early career when I was investing with other operators. I've seen quite a bit of time, pretty much all of the time, that when an operator buys a property, they have some funds to invest for the construction, the renovation, so that the property looks nicer. Now, their whole business plan revolves around improving the property so that they can increase the rents. But that's not always true. The way we do it, the way we have learned over the years is renovating property is an essential part, but it doesn't necessarily mean that you will have higher rents or your NOI will go up. Your NOI goes up when your residents are satisfied in your property. 9 or 10 times, you will notice that a property is very nice, the renovation been done very nicely. Um, and the sponsors or the operators or the business owners who own that project have spent quite a bit of money in there. But then you don't see an output. Why? Because they have done everything in the wrong order or wrong at all. One more example I'll give you. Um, a lot of times, operator or business owners, they wants to go in and they wants to just paint the property to have a new look. Well, guess what? The resident who's living in the unit do not really care about the new paint outside of the exterior building of the property. What they care about is the stuff. Are they getting the customer service in their unit? Are the work orders getting fixed? Are the stove, the kitchen, the toilet is getting fixed on time, right, with the right service? When you provide that right service, your rent increase automatically goes up. Your renewal percentage, your renewal increase goes up. When I say renewal increase, what I mean by that is when a possibility of a tenant being satisfied and going to renew his lease is way higher when you are taking care of their, when we as our team is taking care of their problems and providing the right customer service, right? So again, we have the right people in the team, and providing the right product with the right person, and we provide the right promotion, right? Those promotions are people for the new people to come in. But if you're providing this right product price and right people product price, the customer service comes with it, right? If you don't have a right team, you won't have a customer service. Um, the, this is one of the very common pitfall. Operator goes in, they have a bunch of money, and then they simply try to put all of the money upfront, hoping that a rent increase will happen. And then they forget about all of the customer service they have to provide. We have a little bit of a different strategy. When we go in, we try to pause the construction of any good to have. We call it good to have or nice to have. We do those nice to have at the very end. What we try to do is we try to take care of immediate problems. Let's say if there's a big pothole or a leak in the roof, those are things that we have to do with 911 basis, which is urgent basis. And then we try to go and try to create the environment of great customer service before we go in and try to add more value, put more dollars in renovation. It's not easy. I can tell you when you have a new team and we're pushing rents, people will come and ask for more better service, right? And that's way harder work than just hiring a GC and getting your property painted. The other part that is super difficult in creating value is, your investment needs to have an ROI. So in other words, when you invest with a sponsor, they will have some money to put down so that they can get the debt and buy the property. When I say get, when I'm saying get a debt means going to the lender and buy the debt and take a loan to buy the property. They will have some other funds to invest into renovations. Those funds could be all of it being invested by investors, or it could be some that investors are investing and remaining is from the bank. Those funds are, for a non-experienced operator or for somebody who is brand new or new in the system, in the operations, they'll tend to go and spend all of that money, like I explained. It's very, very hard to evaluate what money are you spending and what ROI are you going to create. Well, for example, one of the things that we do is that we try to pick top 3 items that we know will bring value to our product. We can those things could be a change of new AC, It could be a change of new flooring in the unit, or it could be a change of um, appliances, right? Or I'll stick with one example, right? A chain of granite on the kitchen counter. What it means is when you change in HVAC, automatically your residents going to see the impact in their electric bill. When they save money on electric bill, you have a higher chance of personal loans. So let's say they're saving $100 or $200, or the bill went down from $200 to maybe $150 or $100. You have a way to push your rents. To give you an example, let's say if you have a 100-unit apartment complex and you raise $50 for 50% of the units, that $50 increase in value is more than $750,000 on $1 million, depending on how far you go into the new increment. How do you get there? Right. Let's say you have $10,000 to invest in the property. You have two ways to do it. Either you go and change or paint the exterior of the property, or you go and start doing improvements, those that can bring the ROI to you. When we talk about changing the countertops or changing HVACs, changing countertop means when you change the countertop for a kitchen, that countertop have a bigger life. You don't have to go and repaint it, resurface it again. That can bring you the ROI in the next 10 months. After that, it's all profit. So those are the things. Again, I'm trying to stay as simplified as possible because that's my daily job. I can talk about it all day long, and how to add value, how to do animations and things of that nature. But I want to stay as basic as I can so that I'm not losing the audience here. Again, going back, why should investor care? Because an investor, when investing with a firm, they should know exactly how they're going to add value. If you see an investment offering and you see a sponsor telling you that they're going to increase the value by $3 million in 3 years, or $5 million in 3 years, you got to know how they're going to do it. Are they going to invest the money in renovation and hope that the value will increase? Absolutely not. Remember, going back to our previous slide, it's all about the NOI, right? If you increase the NOI by $1, that's where it boosts your value for the property. Right? Commercial real estate is nothing more than just think of it as a big commercial building running as a business. Right? But when you as an investor go in and try to figure out, should I be investing in them? Right? There's so many other factors, the market condition, um, natural calamity, COVID is one of the reasons. And we were doing way better than COVID than any other year because we knew the value of our people, product, price, and our customer service was already being built with our property. Right? So luckily we got saved, right? But I know a lot of the competition really struggled in the COVID times. So in summary, right, the role of operators in multifamily creation, value creation is all about operations. How well can you run your business, right? An apartment complex or running an apartment complex is nothing more than running an effective any business. It's a little bit harder because they have a lot of moving parts, but if you are a business owner and if you have run any business in the past, you exactly know what I'm talking about. This is one way of just looking at it. When you own an apartment complex, you have to run a business. Operations is the backbone for a successful value. Right? I mean, the whole summary of this conversation is about how well can you add the value in the most efficient manner? Right? In what sequence? How do you increase the NOI with the least amount of capital infusion? Can you renew somebody with just good customer service? Not doing any value improvement to the unit. Well, that's a win. Right? And that's what we look for. That's why as a passive investor, or even as an active investor, I'm an active investor. I buy my own projects, but when I invest with other people, I also look for those things. Right? I cannot invest every single dollar in my projects because over time my revenue increases or my net worth increases, and I have to deploy, I have to invest with other people. And that's one of the things that I love to do. Right? I invest with other people as well, so that number one, I can teach them something or learn something from them. And number two, I can also get some returns without doing it. That's a sort of thing that I can do. So in summary, if you're a passive investor, you should look for the experienced operator who knows how to enhance the value of the property. So the summary is knowing what the cap rate can do to your property. Right. I want to go back to this screen again. Knowing what a cap rate is and what that cap rate can do to the property, and knowing how to increase the value, right, is the is the is the bottom line, right? When in apartment complex, I tell my team all the time, you make money when somebody renews. When somebody is moving out and you're trying to renovate the unit for somebody to move in, that's not as sweet as somebody who stays there and renews. Right? It's, let's say if somebody's paying 800 bucks for one bedroom. Now they're renewing their lease for $1,000. That's a $200 increase for one unit. I don't want to go into too deep on the detail, but if you take that number and try to extrapolate for 100 units, that's a huge value increase just by renewing one person. Versus if that person moves out because you increase the rent too much and you're not doing anything else, which means you're not providing the customer service, you're not solving their problems. There's two types of renovation. The renovation, which is, we call it capital expenditure. That means you have to infuse the capital in the project so that things are bearable to live on the project. For example, you have a big pothole in your driveway. Clearly, you have to fix it, and that's the capital expenditure. But fixing that driveway does not mean that you are still able to renew people. So going back, the renewals are the key for a successful operation in the apartment complex. And the renewal comes with deferred maintenance, work orders to be fixed, customer service. Yeah. Those three items do not need capital. It's only need good operation and a good team. With said that, we do currently we are working in three major areas right now. We have quite a bit of properties in our pipeline. These are mostly distressed assets, distressed multifamily apartment complexes. What it means by that is we are seeing in the market right now, to give you a perspective, if somebody from commercial real estate industry is listening, as of today in April 2024, we are predicting about $2 trillion of debt coming due in 2024. That includes apartments, offices, industrial buildings, self-storages, restaurants, and you name it. A bunch of them is in apartments. Right? So what we're seeing right now is apartment complexes that were getting traded for $10 million in 2021, 2022, is now getting the same apartment complex in better condition after all the renovations been done by the previous owners, is trying to sell those apartments for $7 million, $7.5 million, $8 million. So we're seeing about 20 to 25% discount in those apartment complexes. Going back to the NOI conversation, if you buy something for a discount, you don't have to do much for the NOI because you already buy something with discount. But if you have a good operator who's improving the NOI, think about that. You bought something for a lower value. Now you're investing with an operator who knows how to increase the NOI. You get this profitability from two angles. Number one, you bought it for a discounted value. And number two, you're investing, working with an operator who knows how to increase the value, right? So not only you're not only capturing the equity on purchase, but you also going to sell the property at a much higher value because your NOI is increased. Right. So we're very excited about these projects to be in our pipeline. We're looking at about more than three projects that we think will be good distressed assets that we can bring to our investors. So stay tuned. If you're not in our email chain or in a distribution or communication system, please go ahead and send an email to us. We do have a real estate income fund that gives about 8% return. And the beauty of the real estate income fund is that it's a real estate back. It produces very high 8% return, and there is no long-term commitment, right? So it's a highly liquid income fund. All it does is if you want your money back, you give us a 90-day notice and you get your money liquidated, right? If you need more information about that, please go to our website. Brian Alfaro, my investor relations director, did a really good job on presenting something last week, or almost 2 weeks ago. You can watch that webinar and invest that way, right? Again, it's a real estate income fund. It produces 8% at no lock time, right? It's not like my CD. I have a CD account with one bank, and they're taking 1 year or 2 year. They're at least locking the money for 6 months before they can give me 5%. Right? Not like this. And all the money that we people who invest money in income fund that goes buying into real estate and producing returns from those real estate. So it's a very interesting income fund. We have a lot of inquiry and a lot of interest that people have shown and did in real estate income fund. We also do car washes. We have a portfolio of car washes that we've done last year. We're taking a little slower approach here because we think instead of car wash in these coming years, we think that distressed apartment complexes will be much more fruitful. But we never know. I mean, at this moment, it could be a scenario where we find a really good opportunity in car wash and we start investing in there. Right? So it goes both ways. We do have a private investor club. If you are an accredited investor, once a month we meet in person. It's a member only. So if you're not registered, go ahead and register, on our website, and or send us an email that you're interested in becoming a part of private investor club. What's the advantage? Well, the advantage is that you meet with like-minded people. These people are people who have invested with us, invested with other places, and we come and meet once a month for either for a property tour or for a dinner. One other thing that we do every month is that we invite current or future investors to come and meet and look at our properties. They come on the properties, they ask questions, and then they meet with the team, right? So it's just not we do that so that you don't feel like as an investor that you're sitting behind the computer and writing a check or wiring money for investment. We open our doors at the property level where you guys can come in as an investor and look at your property, right? With the property that you're invested in. Meet with the manager, meet with the on-site staff, and it's a pretty decent event that we feel very, very charmed about every month. It's a first Friday of every month that we do this event. Except for this Friday, in the month of April, it's the second Friday. If you want to get, I don't recall what exact date is, but if you want to come to one of our property on a Friday on the property tour, it's a free tour. There's nobody's trying to sell you anything. It's a purely an education tour, right? So I talked about the in-person events, which basically we invite you for our property tours, we invite you for our investor event. And then online real estate education. These are the webinars that we talk about some key items. And then more importantly, when a new investment opportunity comes in, if you're a part of a private investor club, you get those opportunities first before anybody else gets. So it's a invite only member club that only people who contact us, we evaluate through we evaluate them, get on a call, and then we decide whether we want to be, be part of this group or not. So if you're interested, please send information. We'd love to talk to you. If you are looking to get in touch with us, this is a QR code on your screen. You can go on our URL, book a phone call. I'm pretty sure my calendar is somewhat booked for the next 2 weeks, but my team members, Brian LaFaro, or even Anand or their calendars will be available. But if you want to get in touch with me personally, you can always email us or contact us through our website and ask for a time with me. So I'll make sure that I'll reach out and try to change some of things in my calendar and try to squeeze it in. Once again, if you want to apply to invest or apply for Investor Club, that's the way to go. I just want to, excuse me. Just in summary, Headway Income Fund. This is a URL QR code right on the screen. Use your phone camera and go to the URL if you're interested. It's only for accredited investors. So if you don't know what it means, go to our website. Try to register and get in call with us. One of my team members will explain you what it is all about, and you can decide whether you want to go for it or not. Again, the income fund produces anywhere between 6 to 8% or maybe more, depending on how much you invest. The minimum investment is 25,000, but if you invest 100,000 or more, your return gets higher. The beauty of it again is that there's no lock time. We have a bunch of people who are just parking their money right now in those funds because the banks are producing good results, but they're still not liquid, right? So they want to stay liquid and they still want to return, get the higher return. So if you are in one of those situations where you want to stay liquid, but also want to get higher return of 8% or more, that's the fund for you. I can tell you that this fund had an extremely good performance. We do not have any delinquency or any non-payments whatsoever. It's been running it for years. I personally have invested quite a bit in that fund, so it's producing results for me. If you are intrigued or wanting to ask more questions, QR code is on the screen. Feel free to reach out to us and we'll help you, or at least be able to answer any questions that you have. Once again, you can text on this number. It's 281-559-7061. Again, it's 281-559-7061. You can either scan the QR code, text us, and we'll give you the slides, or you can even go to our website and schedule a call with us. With having said that, I think I'm 9 minutes early. If you guys have any questions, go ahead and ask. I've been seeing some of these questions coming in. If you have any other questions, you can always send an email at investor@headwaycapital.us. Our website is headwayinvestment.com. Once again, you can go to our website and see what offerings do we have right now. Having said that, I'll take 1 more minute just to recap where we were at our today's topic. This is our executive team. It's on the far left. It's me, Seth Shami, Anand, Brian LaFaro, and Umar Nakvi. You will also see the same faces on our website. If you want to register a call, you can pick one of these people in the calendar and pick one of the times in the calendar and get on call with us. Having said that, thanks a lot for everyone joining us today. If you wanted to get a little bit more background on us or talk about just have any other questions, feel free to reach out. Having said that, thanks a lot for your time today. Thank you.